So, what happens when one of the most watched investors in the world makes a multi-million-dollar bet on a stock that, well, seems to be falling? You have to ask, right? What does she see that the rest of the market is missing? We're going to break down this high-stakes gamble. $7,270,000. Yeah, you heard that right. That is the exact size of the bet we're talking about, placed on one of the biggest, most popular tech stocks on the entire planet. And that really is the central question of this whole explainer. The stock's been struggling, no doubt about it, yet a major player just decided to double down. So let's dig into why. Okay, let's start with the bet itself. We're talking about a multi-million-dollar move that totally goes against the grain. And to really understand the why, you first have to look at the who. The investor we're talking about is Cathie Wood. She's the CEO of ARK Invest, and she is famous for these huge, high-conviction bets on what she calls disruptive innovation. Companies she truly believes are going to change the future. So when she makes a move, people definitely pay attention. And true to form, that's exactly what she did. On January 21st, her firm just snapped up over 83,000 shares of Netflix. Now, this wasn't just some random buy. It happened right after Netflix announced some surprisingly strong earnings. But the market's reaction wasn't at all what you'd expect. And this is where the story gets really interesting. It leads us to what we're calling the Netflix paradox. At its core, it's a classic conflict. The company itself is reporting fantastic results, but the stock is, well, it's not doing so great. I mean, just look at the disconnect this slide shows. On one side, you've got all the signs of a super healthy company. Revenue's up, ad revenue is way up, operating income is climbing. But then you look at the other side, and the stock price is just falling off a cliff, losing almost a third of its value in just 6 months. So what gives? Turns out the market wasn't really looking at those great earnings numbers. Nope. It was spooked by something much bigger. A massive industry-shaking bidding war. And for a long-term investor like Cathie Wood, that short-term fear, well, that's what creates a buying opportunity. Okay, this brings us to the real main event, that massive Warner Bros. Deal that's causing all this chaos. We are talking about an $82 billion entertainment deal that could totally reshape the entire industry. This is the game changer. And you don't have to take my word for how important this is to Netflix. Their own CEO, Ted Sarandos, he called it a strategic accelerant. In other words, this isn't just about getting bigger. It's about hitting the turbo button on their entire business. And wow, this slide really shows you what that acceleration looks like. Netflix wouldn't just be buying a few movies. They'd be buying the legendary Warner Bros. Studio itself, the entire HBO library, all of DC Comics, and even expanding into cable, merchandising, and video games in a huge way. We're talking a total transformation. But here's the catch. It is not a done deal. Not by a long shot. Netflix put an incredible $82.7 billion all-cash offer on the table. But they're not alone. They've got a rival in Paramount. And the whole thing is going to face some intense regulatory review. The next huge hurdle is a shareholder vote coming up in April. So you might be asking, why is Netflix confident enough to make such a colossal bet? Well, to get that, you have to appreciate the dominant position they're already in. They are, by pretty much every measure, the undisputed king of streaming. Look, even without Warner Bros., Netflix isn't just a player in the streaming wars. For a lot of people, it is the game. I mean, this chart from back in December of 2025, it pretty much says it all. Netflix alone accounted for 9% of all time spent watching television in the US. Just look at how it stacks up against its direct streaming competition. It's not even close. To put it another way, if you add up the viewership of its next two biggest rivals, Prime Video and the Roku channel, Netflix is still bigger. That's the kind of power they're bidding from. So, with this massive deal hanging in the balance, where does all of this leave us? Let's take a look at what happens next and how this whole thing could shape the future of, well, your screen. There are 3 huge milestones ahead. First, the deal has to survive some really intense regulatory reviews on 3 different continents. Second is that all-important shareholder vote in April. And if it passes, then the absolutely monumental task of merging these 2 giants begins. At the end of the day, you have to realize this isn't just about one company buying another. This is a potential tipping point for the entire entertainment industry, a huge step toward a future with fewer and much larger media companies. And that leaves us with one last big question. Cathie Wood's bet is on a specific company, sure, but the outcome could affect all of us. Are we heading toward a future where our movies, our shows, our comics, and our games all come from a single subscription? That's the real question at the heart of this multi-billion-dollar game.